Nvidia board approves massive $50 billion share repurchase plan, September 2024. Here are 5 highlights. 1. If you had invested $1,000 in Nvidia stock 20 years ago. 2. Insider selling is at record levels. 3. Nvidia's $50 billion repurchase program sends mixed signals to Wall Street, while insiders are unloading. 4. One reason to buy Nvidia stock after the recent pullback. 5. Could Nvidia have found a better use for the $50 billion repurchase money, while being on the top of the AI boom? Now let's dive in. What does that mean in dollar terms? If you had invested $1,000 in Nvidia stock 20 years ago, it would now be worth nearly $1.3 million. In contrast, the same $1,000 invested in the S&P 500 would be worth about $7,500 today. If you had bought $1,000 worth of Nvidia stock in 2005, your investment would have grown to $731,449. Insider selling at Nvidia has reached record levels. CEO Jensen Huang sold 4.8 million shares, valued at nearly $580 million, over 20 trading sessions from mid-June to mid-August 2024. Notably, the last time an Nvidia insider purchased shares on the open market was in December 2020. This gap between insider actions and board decisions may erode investor confidence. The company's board has approved a massive $50 billion share buyback, despite unprecedented insider selling, which has exceeded $1.6 billion in the past year. This move raises questions. Why aren't insiders buying shares on the open market if the board believes the stock is undervalued? The new buyback program, outlined in Nvidia's second quarter report, adds to the $7.5 billion remaining from its previous repurchase authorization. Companies generally authorize share buybacks for 2 reasons: to increase earnings per share, EPS, by reducing the number of outstanding shares and to signal confidence in the stock's value. By repurchasing shares, companies can boost EPS, making the stock more attractive to investors focused on fundamentals. Buybacks also serve as a signal to the market that the stock may be undervalued. The announcement came alongside the company's fiscal second quarter earnings report, which exceeded Wall Street expectations. Despite the strong results, Nvidia's shares fell 4% in extended trading. The company's revenue surged 122% year-over-year to $30.04 billion, while net income jumped 168% to $16.6 billion. Nvidia also forecasted third-quarter sales of around $32.5 billion, beating analysts' estimates of $31.7 billion. In the first half of fiscal 2025, Nvidia returned $15.4 billion to shareholders through share repurchases and cash dividends. By the end of the fiscal second quarter, the company still had $7.5 billion left under its existing repurchase plan. This new $50 billion buyback follows a $25 billion repurchase announced last year. Stock buybacks often drive up a company's stock price. For example, Apple's announcement of a $110 billion buyback in May led to a 7% rise in after-hours trading, even amid declining sales. However, despite Nvidia's strong financial performance and substantial buyback plan, its stock still dipped. Experts suggest that Nvidia's consistent outperformance has heightened investor expectations, making it harder to spark a positive market reaction. One reason to buy Nvidia stock after the recent pullback. There's another compelling reason to consider buying Nvidia stock after its recent pullback: the company's aggressive share repurchase plans. Nvidia's board of directors has approved a $50 billion stock buyback, adding to the $7.5 billion remaining from its previous authorization. While the total buybacks represent less than 2% of Nvidia's market cap, this significant increase highlights the board's confidence in the company's future growth. Nvidia's willingness to invest another $50 billion in its own shares could bolster investor confidence as well. Moreover, the demand for powerful GPUs is rising as the next generation of generative AI approaches. Nvidia CEO Jensen Huang stated, "The world of human-engineered software is moving to generative AI software," noting that Nvidia is already extensively using generative AI in its coding. However, he emphasized that current applications like coding, chatbots, and image generation are just the tip of the iceberg. Huang highlighted other areas being transformed by generative AI, including ad targeting, large-scale recommender systems, robotics, and search systems. Training these next-generation AI models will require 10 to 20 times more computing power, creating a massive growth opportunity for Nvidia. As the company capitalizes on this expanding market, it positions itself as a key player in the AI revolution. Could Nvidia have found a better use for the $50 billion repurchase money, while being on the top of the AI boom? To maintain its leadership in AI-accelerated data centers, Nvidia must continue making substantial investments in research and development. With the upcoming launch of its next-generation Blackwell GPU architecture and the Rubin platform anticipated in 2026, it's worth questioning whether the $50 billion allocated for stock buybacks could be better spent on innovation rather than providing a modest boost to quarterly EPS. Considering Nvidia's fabless model and reliance on third-party manufacturers amid chip production constraints, the real question is why the board chose a $50 billion buyback instead of directing those funds toward more strategic investments. Could this be a sign that Nvidia's best days are behind? Let's hope not, as the hype around AI brings powerful tools and innovations that will transform areas we can't even fully grasp yet. AI and Nvidia to the moon, just because we love it. Thanks for watching, good luck and good profit. Edward Cash Trader, please read the disclaimer in the description below. You can support the channel by subscribing and turning on notifications. Let's grow the channel together.